to track as far as business expenses. And I've got a really great video that I normally show, but I don't have time today. If you've ever seen the show Schitt's Creek, SCHITTS, there's a cute scene. If you say Schitt's Creek right off, it's a 2-minute video of Dan Levy and his father, which is super cute. So anyway, what to track, what's a write-off, what's a tax write-off? It can be so confusing. So let's get some examples of deductible expenses. So if you do any sort of continuing education in your craft, those conference and seminar fees, airfare, travel, food, ground transportation, those are all write-offs as well. And I'll give you a sneak peek because I won't be here to do my elevator pitch, but my favorite expense to deduct is travel. My secret weapon is my sister. She does all my marketing, and I bring her to accounting conferences as my guest. I pay for her lodging, her ticket, everything. We get sister time, we get educational time, and we learn so much. And so that's my favorite one. Office supplies, professional organizations, and networking fees. If you're not deducting the cost of today's gathering, you need to. Materials for the development of your product. So what I mean by that, I'm going to use Jamie as an example. So all of the materials that she buys in order to engrave something, or she bought these cups and then engraved them as per order, all of those materials are what's called cost of goods sold. So when her money comes in the door, she can subtract all that, those materials, because that is what she needs to then therefore create her products. So be sure you're doing cost of goods sold if you have tangible goods. I have cost of goods sold in my business. They're not tangible goods, but I have labor that I paid for. I have outside contractors. So my top line number, I can directly take the cost of those contractors out of my gross income to make it a net income. Tools in production of your product. Again, Jamie, she's got an asset now. She's got a laser. So that goes on her balance sheet. It can be depreciated. It's part of the nature of her business. And it's also an asset because for whatever reason, if she wants to get a bigger, better one, she can sell that one. It's a sellable asset. Other ones, advertising subscriptions. If you, for cash, if she's got a subscription to, I don't know, Photography Monthly or something like that. Exactly. So any sort of subscriptions, whether it be software or, again, continuing education media. The book club that we have as part of Cobb Women in Business, every single book I've ever bought is a business expense because it is feeding my brain new information and learning that then gets incorporated into my business practices. There's the contract labor that I spoke to earlier. So in a nutshell, it's all the categories on your profit and loss statement. Most everything on a profit and loss statement is a dollar for dollar write-off. Meals gets a little tricky. That's a whole separate discussion. But otherwise, it's usually a dollar for dollar write-off. Mileage, 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 okay? So don't leave money on the table. This mileage rate increases every single year. It can also increase during the year. Let me make sure we're on the same page. Yep. So say a hurricane comes through and knocks out a bunch of oil refineries, as it has in the past. They can change the rate mid-year. So if you're tracking your mileage, be cognizant that there may be a rate change during the year. So don't finalize your mileage for a year until you've made sure that your rate is correct. I believe it was 2022 that they actually changed it on July 1st. So, for example, the distance from my house to this location is 11 miles. And actually, that's a typo. It's 14. I found out this morning. When I Googled it yesterday, I was like, oh, okay, 11. It's 14. But so in this example, that's a $7.70 mileage, but a round trip is $15. So this is the easiest way to recapture business expense. And you can handle this a couple different ways. You can actually write yourself a check out of your business bank to yourself to reimburse you for that mileage. I do it once a year, and it goes mileage, boop, right as a line item on your profit and loss. It can also be incorporated into your tax return if you'd rather handle it that way. May not seem like a lot, adds up, okay? The last 2 years, anybody want to venture a guess how much I wrote off in mileage expense? Okay, anybody? 9? Okay. 1999. So over the last 2 years, I've written off $2,300 on my little old Pilot. Love her to death. My longest drive was to LJ for the retreat that Melinda hosts. Everything else was Metro Atlanta. So get an app, get a spreadsheet, get something. This does not need to be tracked in your accounting platform. Like I said a moment ago, you can just issue a check to reimburse yourself. Or just log the time for tax purposes, the total miles, and then do your calculation. And like I said, check in July and January again of the following year, just to be sure the rate hasn't changed. And as a PSA, I've heard good things about the Mile IQ app. I personally do not have an app. I do it the old-fashioned way by going through my calendar and logging where I've been this last week or last month or last year. I haven't done my 24 calculation. We'll see how that goes. The only thing you cannot track mileage for and deduct mileage for is traveling from your home to your brick and mortar. So all of my travel from my house to my office on Johnson Ferry, I can't deduct that because that's normal course of business. Other deductions you might be eligible for, home office expense. The calculation seems to change, and I always look it up to be certain, but it's a certain percentage or a square footage, exclusive use, blah, blah, blah. Your home office internet access. If you work at home, you can write off part of your internet expense. Your cell phone. For instance, I'm on our family's plan, but at the end of the year, I sum up what my portion of the bill was and deduct that as an expense, write myself a check for that, boom, goes right on the profit and loss. Depreciation of furniture, computers, equipment, like I mentioned earlier. Other tips for business success. Have a separate bank account for your business. Number 1. I cannot tell you the hours of frustration I've spent trying to carve out somebody's business from intertangled with their personal life. Have a separate bank account. Say it again, sister. Also have a separate credit card. There's a little bit of a misconception on business credit cards. You open a business credit card with your business name and your name on it, but it's using your personal credit to give you that credit card. As a small business, it's very hard to build credit inside the business. Start small with like an Office Depot charge card or something to start establishing credit for your business entity. Let's see. Don't forget startup expenses. These get lost in the shuffle for a lot of people. So when you register with the Georgia Secretary of State, you have to start there. So you have an entity, but you have to pay, but you don't have a business account yet because you have to be registered with the secretary, So it's like kind of chasing your tail at the beginning. So make sure you capture all those expenses. And if you can't pay yourself back right away, that's fine. Let's just account for it as an owner investment in the business and get it onto the balance sheet so that you can pay yourself back. And it's really tax-free income, so to speak. You're paying yourself back for that expenses. Try to stay away from cash, gets lost in the shuffle. I had a quick story. I had a potential client call, and it was a landscaping company. I won't mention the name because they're around everywhere. And the gentleman was telling me how his office people couldn't get his receivables correct. And every time they send out a bill, it was wrong. They'd missed a payment, this, that, and the other thing. 5 minutes later, he flips the conversation and says he really enjoys the aspect of pocketing the little old lady's cash when he mows their lawn. And I don't think we're going to be able to work together, sir. So stay away from cash. So what's the worst thing that you can happen if you don't record your expenses? You overstate your revenue and you end up paying more in taxes. So capture as many as you can. If you have any questions, please reach out to me. Do we have time for questions right now, Miss Mel?
Yes.
Okay. So lay it on me. Tax time. Yes, said no one ever.
4-letter word in my house.
Yeah, it's April 15th is a dreaded day unless it's your birthday, and that's quite unfortunate if it is. So
Also with the home office, can't you also deduct part of like the electric bill, and is it also the gas bill? So, like,
it's all wrapped in that, yes.
So, okay, so it's not just the space, which you have to calculate, but also electric. So I'm not wrong. Okay, cool.
Yep. Yes, ma'am.
Going to the topic, you mentioned always have a separate bank account
Mhm.
for your business. Is there anything you need to do when you like pay yourself out of like you move money from the business account to your personal?
What that's called is an owner draw. So there's a couple different ways to pay yourself. You can do the owner draw. If you convert an LLC into an S-Corp, then you can run payroll for yourself. The advantage to it, and it costs more to do that, but the advantage of running payroll for yourself is instead of paying a quarterly estimated tax, you're paying your Georgia income tax, your federal income tax, Social Security, all that fun stuff. You're paying it all year long and along the way. Because if you do quarterly estimates and the estimate's wrong or you forgot to send one in, you'll get penalties. But as long as, I think the rule is as long as you, through payroll deductions, get within $1,000 of your ultimate tax bill, they can't penalize you if it's been done through payroll deduction. So it's one vote for an S-Corp as opposed to an LLC.
I'm
Ma'am.
just gonna say, I'd rather have a root canal with no Novocaine than do my taxes. But I have found an app, a tool. It used to be called TaxBot, and now it's Hurdler, HURDLR, and it tracks your mileage, and you can put every credit card, every checking account, everything in there, and then set it up to automatically sort, like every purchase from Office Max goes into Office, every purchase from whatever. And then you just have to go through at the end of the year and make sure everything's sorted correctly or enter things that maybe you did do something crazy and pay cash, but save the receipt or whatever. So it does save time. I'm still a little anal when I go back through every bank statement and everything else because I do not want to give the IRS a nickel more than they deserve. So, but anyway, that's a good one to help you keep on track with your mileage and also does that pre-sorting for you.
Mm-hmm. And it doesn't have to, I mean, I'm a QuickBooks certified professional. There's different levels of QuickBooks subscriptions. You know, you don't have to be on the super gusto plan that has inventory and all these tools that you need. There are some really small level QuickBooks options. There's also FreshBooks, Wave Accounting. There's other softwares out there. This one is new to me. Thank you for sharing. But as long as you're keeping your business expenses in the business bank, the business credit card, it should be fairly easy to just sort through, like maybe even just download your whole year and sort them. You can do a nifty little data filter in Excel, because I love a good spreadsheet too. So I was filtering the heck out of yesterday when I was working. So is that it?
I was gonna say, I'm old school with the mileage is my thing, but I'll be incorporating that in my thing. But for me, I live far away, so instead of doing you said, oh, I'm 11 miles or whatever, because, for example, today I got rerouted, and so the other route is like 5 miles farther. So I always just write the mileage, beginning and ending mileage of my trip down, because I could go back and track it, but then I'm probably losing anywhere. I could be losing hundreds of dollars.
Yeah, you could be, leaking out. What do they call that in retail? When inventory is wrong, shrinkage. Nobody likes shrinkage. There's a hand over here. Yes, ma'am.
Yeah. What about sole proprietor? Like, if you're a sole proprietor, I just transitioned over from W-2, and I spoke with an accountant. She told me to open up a separate checking account, which I did with QuickBooks, like the freelancer version or whatever.
Yep.
But let's say I get monthly stipends or whatever they are. Can I just leave whatever is in for taxes and pay myself the rest? Maybe leave a buffer for business expenses or that kind of stuff, and then pay myself the rest.
So are you like a contractor? Okay. So you're basically gonna have your personal taxes, throw this stuff on your Schedule C. So I, as a general rule, take 25 to 30% of your net and hold that back for taxes. Definitely try to make quarterly payments, because I made a mistake when I was, just getting going, and I didn't make any payments on quarterly, and we got the tax bill. I thought my husband's eyes were going to end up at the back of his head. So that was a tough lesson learned. I was like, I didn't make that much this year. Oops, sorry.
Good problem to have.
Good problem to have. If you make more, you get taxed more, but you're not more. So is that it? All right. Thanks, y'all. Appreciate it.